Hello guys, in this video I will try to focus on dividend investing, and I will tell you some facts about this dividend investing, because when sometimes I go online, just before I watch some videos, and some people they pretend to make money from dividend and with little money. So this is so I think it's like so stupid to follow like this without understanding even what is a dividend. Okay, before we go to investing in dividend, what is it? Dividend, it's not what you have read in the books and online. They give you I'm not saying a false definition, but they give you a definition that it is not applied to the stock. It's a definition that it is applied to the people who work and executives of that company. This is what they are meaning. They mean that. They don't mean the stock. The stock dividend is so different. They don't give you dividend because they like you. So why do you think you buy 100 shares of a stock? Let's say you buy this share. Let's say you buy this 100 shares with $10,000. Okay. Now, let's say the stock. Let's say it's $100. Just to make the calculation very quick, because $100. So if you buy 100 shares, you buy it with $10,000, right? It's okay. Now let's say the dividend or the yield each year is 2%. You stay 1 year, and then this is the yield divided into 4 quarters. Each end of a quarter they give you some of this dividend. Okay, so 2% out of 10,000 is $200. Now when they give you $200, they tax this $200, because you are not selling. You don't want to sell, but they oblige you to give you a dividend in order to take tax from this money, although you don't want. Now, from where this $200 comes? Does it come from the company earnings, or does it come from the stock itself? Well, I know that most people, they don't know. It comes just from the stock, because they cut it from the stock. They don't cut it from the earnings. It means that the company, when they take this $200, they take it from the stock itself. For example, the stock is $100. If they take $200, how much it will be? It will be $98. So this is the case in dividend. Now, for you, how do you invest in dividend stocks? The good thing is you should see always the price. Does this company stock price going each year, yes or no? It means if this stock company, if this stock is $12 this year, next year is $15, the other year is 17, the other year is 20, the other year is 21, and then sometimes we have a bad year. Let's say from 21 it goes to 18. Okay, and then 18, the other year it goes to 20, 25, 30, 32, 35. Okay, when you see all this stuff each year, what does it mean? It means that this company is growing so good. It's growing. Now, if you buy and you get a dividend, this is how you make money. You make money when the stock is making advance and it's growing. It's not because of the dividend that you make money. You make money because there is a push and there is mutual funds that are buying this stock. Okay? Now, so the two criteria that you see is the price of the company, and you see the dividend. Understand the dividend. I'm telling you some more information to be sure. A dividend is not an obligation. You say, oh, they should give me a dividend here. No, they can stop it at any time, or they can minimize it. For example, it gives 2%. Next year they say we give only 1%. It means taken from the price. Or they can raise it. So they do wherever they want, because it is the price that this dividend is taken from. It's not from the earnings of the company. Earnings of the company you will never see. You will never see, and stop thinking that the company, because you buy 100 shares, they give you a check from the company. Okay? They give you money, it's just from the stock itself. So these are the two criteria that I see always. It means you see if the dividends are given each year, and there is no trouble with that. And if the dividend is growing, for example, this year they give you $1, next year they give you $1.25. It's like this. It means it's growing, because the company itself is growing and the stock is growing each year, as I described. This is the two criteria. In order to make a lot of money, you should invest a lot of money. I give you an example. Let's say you have, I gave you an example having 3 accounts. One has $10,000, the second has $100,000, and the third one, who has money, middle class, let's say middle class, he has $1 million in his account. If they give you, let's say 5%, if you have an account with 10,000, how much they give you each year? It means how much they give you, $500. Now let's say someone who has $100,000, how much they give you a year? They give you $5,000 put into your account. You can take this money, or you can invest it again, whatever you want to do, because it is your money. Now, and the $1 million, how much he has? He has a $50,000 dividend. Now, who is the best one in your opinion? It's always the people who have money. They can have more money. If you have little money, you always have little money. Okay, this is in terms of dividend, as I spoke. Now, if you are trying to invest in dividend stocks or mutual funds or so on that give dividend, you should invest a lot. There are some people who can invest a lot, and you should do so when you are young. You just begin at 20 years or 25 or 30 years, you discover stock market, you discover investing, and you invest a lot of money. This a lot of money can grow so fast depending on the years in the market. Okay, so thank you very much for watching this video. If you have a question, please comment here or send me a private message. The email is on the top of the description, which is always here on the top of the description. Just take the email and send me an email. And please subscribe and share my videos on Facebook and Twitter or whatever you want. And thank you very much for watching.